Okay, Prakash, thanks for staying on a little longer. Appreciate you joining us with that perspective, and have a good weekend. And I will see you back soon again. Ajay Vora is head of listed equity alternates at Nuvama Asset Management, and he's joining us now to talk about markets. Ajay, I mean, I think we can safely now describe this as a bit of a melt-up which is happening, right?
Yeah.
Will this continue is the question, and does it have legs according to you?
So, hi, good afternoon, Prashant, and thanks for having me. So, I think if you remember last time when I was on your show, maybe somewhere around 17,000 odd levels, we were pretty positive, and all the technical and the fundamental factors was supporting for this kind of a rally. And I think this still has some steam left, both again based on fundamentals and technicals. Because if you look at it, most of the earnings so far, except the IT sector, has been fairly strong. And most importantly, if you see the FI inflow has still not picked up in a very big way. Most importantly, technically also, if you look at it, large part of the FI short is out of the system. So right from the highs of 18,000 crore odd, they are closer to 2,000 crore. But at the same time, the HNI positioning has also been completely liquidated. So the market is fairly light. That is what I just want to explain on the positioning side, as well as if you look at the fundamental results from the banking sector and a couple of other sectors also, we have seen reasonable upgrades. I think this can rally a few percentage points from here on as well.
Only a few percentage points, Ajay. I thought you were going to say we're going to be dancing away to the bank. You believe we've got limited upside, looks like. Then
if you go to our all-time high levels, it's still 5%, which classifies in the few percentage points, right?
Ajay, you've got some support here.
It's just that, lifetime high sounds a lot better than a few percentage points.
Yeah, that's right. Okay, Ajay, let's leave the headline index aside. I think, when you joined us last time, if I remember, you were also talking about pharma, right? As one of the sectors that we're looking at. Now, that's done pretty well. But does it have enough steam to move higher from here as well? Because we had a big IPO, so maybe you normally see excitement in that space. Still, some numbers are quite disappointing. Out of the woods, would you continue to buy into pharma, or it's done?
So, Nigel, pharma has always been a very much stock-specific story. It's not like the banking sector does well; all the banks generally do well. Pharma is not of that kind, and therefore, when we discuss pharma, we were very positive on selective names, and in fact, they have done reasonably well over last, I would say, 1 or 3 months.
Ajay, if you could name a few, please, for the benefit of our viewers.
So if you look at something like, Glenmark Pharma, the stock has rallied almost 40% from the lows over last 3 months. And, a similar name in API also, that name has also done significantly well. So it has always been a stock-specific story, and we were pretty convinced about the valuation, about the business being intact. And whatever the company was doing over last maybe 6 months or so, that gave us a lot of confidence. So basis that, we were pretty positive on this whole space. And in fact, barring a couple of names, most of the other companies have done reasonably well.
What about banks? You've been bullish on banks for a long time now. Numbers are looking good. But are you okay to buy at current levels after the outperformance? Names like an Axis Bank, ICICI Bank, HDFC Bank.
So I think we are still very positive on the private sector banks, especially say ICICI Bank and HDFC Bank. Both have been reporting fairly strong numbers, and I think the runway is still from here on as well. If you look at the overall economy also, barring a couple of pockets on the consumer discretionary side, I think we are doing pretty fine. And the credit growth, maybe it was a bit at elevated levels around 17-18% earlier. Maybe it will be closer to 13-14%. But considering, the whole growth story which is ahead of us for all these private sector banks, and the valuation, again, I would say it's not that expensive. It is closer to mean or maybe slightly above mean. I would still stay very constructive on the overall private sector banks.
Overall constructive on private sector banks. Ajay, the way broader markets and mid caps, etc., are moving, right? It's so varied. I mean, it's not as if there is one sector which is moving up. It is not FMCG, or it is not pharma, or it is not, all the banks which are doing well. It's is it very discerning what we are seeing out there right now, or this is some kind of a liquidity pushing up a lot of things? And by the way, it's volume led. It's not as if there is volumes which is lacking.
So that's a fairly good point, Prashant. So if you look at it, I was just about to, talk about the same thing. The action is largely on the mid and the small cap side. And I think, again, if you clearly remember in March end, at that time, the liquidity played a big role in the way the stocks were hammered. And most of the names were down almost 30-40% over a 2-month period. And in fact, if you look at, the businesses were fairly strong. Just to, if you look at a couple of sectors where, railway ordering was huge, or on the capital goods side, the order inflow was pretty significant. All those names were also down almost 30-40%. So my sense is that, that liquidation happened somewhere in end of March. And for the current month, if you see, most of the names are again up around 20-30%. And in fact, if you keep aside the whole consumer discretionary side where you are seeing reasonable slowdown, barring that, there are a lot of other businesses where I personally feel that, the leadership is being taken in a couple of, pockets. And those names are doing fairly good. So my sense is that the older sectors on the mid and small cap, which took leadership, may not do that great going forward. And you'll see some completely new pockets emerging. And we can see significant outperformance over there.
And even in your note, Ajay, you're mentioning that the shorts, actually, a lot of short covering has already taken place. So now the way the markets are moving up, it's smelling of maybe, in fact, big cash market flows. So maybe the institutions there on the buy side, let's see what that data throws up. But 120 points higher, and we've been building onto those gains. So that's good news. Ajay, you're talking about various pockets participating. One bombed out space has been these new age themes. And a couple of stocks like Zomato are now at the high point of the day. Nykaa continues to see selling pressure. You can't paint all of them with one brush, but are some of these stocks looking good? If yes, which one of them would you prefer?
So I would not like to comment about the new age specific companies, but broadly, I personally feel that if you look at the global setup now, with the way inflation has peaked out, and going forward also, if you look at the whole agri-commodity prices or metals or even the housing prices in US, they have corrected quite a lot. So inflation has definitely peaked out. And if this is the last hike which we are seeing from Fed maybe in the next week, that also we don't know if that will be a pause or a hike. But I think if at all, that will be the last one. And that is what, the US markets have also started pricing in. We saw a very sharp rally yesterday. So all the, even the companies are reporting fairly good numbers. If you look at, Meta and a couple of other companies, they have reported fantastic numbers. So maybe, some sort of interest may come back into these, significantly corrected new age companies. But I would say that, apart from that, there is a lot of value in other small and mid cap and new businesses, because these companies are still yet to make decent profit, whereas the overall market cap is still pretty high.
Ajay, thank you very much for joining in. That's the view coming in from Nuvama Asset Management. By the way, keep your eye on India Mart. The stock is up nearly 2% in trade.